Have you ever wondered which indicators are actually useful? And on top of that, do you wonder if there's an indicator out there that could tell you the general direction of the stock price for a day? Hi everyone, and welcome to the Beginner Trader series. Today's topic is the volume weighted average price. To start, we have a 5-minute chart on October 4th, 2022 of the S&P 500 futures contract. The reason we want to use the VWAP is to help us determine some simple market context. What that means is, it will help us determine the type of trades we should be looking for. For example, when looking at the VWAP with price, we can make observation that 3 general contexts tend to happen. 1. When candles are closing mostly above the VWAP, we want to look for long positions only. Then 2. When candles are closing mostly below the VWAP, then we're looking for short positions only. Then 3. When candles are closing both above and below the VWAP equally, then we'll see that the price doesn't move anywhere and stays within a specific range, so we'll consider it a range day. The red line is the VWAP, so now we're just looking for 1, 2, or 3 to help us determine the simple market context. It's clear in this instance that almost all the candlesticks are above the VWAP, so we'll consider it market context 1. Using what we previously learned about trend lines, we can see that we can draw one here. Then, when the price comes to touch our trend line for the 3rd time, we already know we're in market context 1. So now when we buy at this point, we can buy with so much more confidence because our trend line is telling us something interesting will happen here, and the VWAP context tells us that it's most likely going up. Note that the 4th touch point is also similar in that sense. Eventually price breaks our trend line, but as you could see, we'd still be in VWAP market context 1. So we are still thinking that the price will continue to go up. If you can recall from our trendline video, we would expect some breaks when it's a corrective wave, giving us the ABC zigzag pattern before going back up. Adding on to this nuance, the likelihood that we're actually seeing a zigzag pattern would be higher if we were in market context 1. This is a separate day than the one that we showed in our trendline video. But in both instances, you could see that the market reaction is very strong following the ABC zigzag pattern. I'm just constantly introducing it to you, so when the time comes, the concept won't be so foreign. But don't worry, even if we didn't know this, we could still use our trendline criteria to help us play the break to the upside. Note that this is a 5-minute chart, so the 1-minute chart would help us get a better entry after the break. Here we have the 5-minute chart of the S&P 500 E-mini futures contract on September 14th, 2022. And we notice that the price isn't staying above or below the VWAP for the majority of the time, so we'll consider it in context 3, range day. Using our trendline criteria, we can make note of a price level as the bottom of our range. Then when we note the 3rd touch of our trendline, we would expect it to bounce off of it and go back in the opposite direction. The simple price target for this trade would be the VWAP. Since it's a range day, we know the price will fluctuate around there again eventually. Since it's a range day, we'll most likely be repeating this process for the rest of the day. So similar to the 3rd touch, our game plan will be the same for the 4th and 5th. Due to our fear and stop losses, most likely we'll lose the 6th trade. But when it comes back into the range again, we can buy another position and sell it back at the VWAP. I'm only focusing on the bottom price level, but as you can see, a similar thing could be done on the top price level as well. Now we'll look at a live trade from this past week using our VWAP context criteria and our trendline criteria together. Currently, we can see that the majority of the candles are closing below the VWAP, so we're in market context 2. Then we notice the break of our trendline where 3 or more candles have closed below it. Then we see price retest and reject off of the trend line to the downside. So I open up a short position with confidence that the price will go down in the direction I want. For my stop loss, I can use the previous local high or I can use the VWAP, because if price got above the VWAP, then the market context that I have in my mind would be invalidated. On top of that, the price would be closing above the trend line, invalidating my broken trend line criteria. So here I'll speed it up so you don't have to sit through it in real time. As you can see, the price has a strong reaction to the downside. I switched the ticker to the micro contracts because I also have a position there as well. I'm noticing the big level of 3,800 being hit. Then I'm also noticing on the 30-minute chart that there's a support being hit as well. So I decide to start exiting out of all of my positions. So I switch back to the E-mini S&P 500 ticker and close that out as well. From the Trade of a Performance tab, you can see that I held this trade for 37 minutes and the P&L was $2,582. If you found this video interesting or useful, please give this video a like to support the channel and future videos. Subscribe to the channel to keep up to date on the newest videos and analysis I will upload. See you in the next one.